Well, good day, all. Ira Epstein of Linn Associates with your metals market update for this Tuesday, July 16, 2019 at 4:30 p.m. Central Daylight Time. So I was listening, as you probably were, to the president talking today. First, I started off the day and listening to the Iranians going at the Americans and all the things were terrible. And then the president and Mike Pompeo, our secretary, are saying, yeah, they're talking to the Iranians possibly about their missiles. Literally a minute later, you saw the spokespeople from the Iranians. We will never give up our missiles. I don't know what reality is. As for oil, who the heck knows? Notice what's going on behind me. Do you see the sea of red that we had in these markets today? Stock markets down. Silver was up strongly, but it was about 8 cents lower than this really in the last trades of the day, and gold was down from here too. This was not where the markets are trading, so they're probably going to open lower. Dollar got very strong today, as most currencies down. We saw that our Fed chairman was speaking in Paris and reiterating again. I watched it, what he's talking about. And what he's talking is still, the Fed wants to get ahead of the curve. Grain market's down. So let's go to the gold. And what we're in is a pause right here. This does not mean that the market's losing its uptrend, but could it get a reaction? Yeah. I'll define the bias as up as long as you're over the 18-week moving average of closes. That's simple. So that'll keep the bias up on a chart like that. When you come to the daily chart, I've been telling you I think we're in a congestion period right here where the market's trying to figure out what to do next. When we put the swing line on it, you've got a pattern of lower highs, lower lows. That's a downtrend. Where did the market close today? Well, it finished at 1411, so it's still over the 18-day average, even though I saw the last trades were under that. So on this chart, you have the bias up, the trend down. You have a market that's finding these Bollinger Bands rushing at them. I pointed this out yesterday. It's even worse today. This is a sign that volatility has come out of the market here, and I wouldn't be surprised that we go to what I'll call a quiet period. We'll see if that's the case. Should you break hard, 1391.40 could be the support the Bollinger Band offers. However, that number is liable to move up. If you take a look last night, it was 1372. Now it's 1391. It's going to get very close to wherever prices reopen tonight. That's the point I'm making. Momentum has been pointing down. So you've had divergence. You've had very clearly momentum to the downside. You were in an uptrend until today. You had this pattern of higher lows, higher highs, and with today's action, when you took that out, you broke that pattern. So what are we in? We're still in the pause. That's the best way that I can phrase that. When you come to GLD, again, momentum's been pointing down. The market tonight finished at 132.40 in this, and the difference in stocks versus what's going on in the futures is the stock market finishes at 3 o'clock and you're done. Well, the futures give you a settlement at 12:30, but don't quit trading until 4 o'clock, and I've always said I think that messes everything up. That's my opinion, and I wish they'd get on with what the world is today. They're all messing around with what they think is a gold fix. Who cares? Lower highs, lower lows. You're under the 18-day average. Therefore, the trend is down, the bias is down, and momentum is down. Resistance is back at the 18-day average, and you've put into play the possibility of price in the lower Bollinger Band making a run at each other. You have the opposite in GDX. The miners are still quite strong. You have the pattern of higher lows, higher highs. You do not have that turn down in momentum. Admittedly, you're very overbought. The market tried again to make a run at that upper Bollinger Band and failed today. It did close higher on the day, so support's back at the 18-day average of closes. Whether this market can withstand what gold's doing on its own, it could. And the reason is, part of the rate, the GDX, you go to all these other miners, these different ETFs. Well, look at the gold-silver ratio. It collapsed on you, and we talked about this yesterday. This was Monday, and I said, keep your eye on this. Watch out. This is the first time it's challenged this number since back here, and this is what it did today. So, good call. Nice boy, Ira. Now the market's given a warning. This part of this leg is over. That's the important thing. And you can see that didn't end yesterday, ended today. So you've ended that leg by taking out all those closes. Doesn't mean you can't get a correction back to the 18-day average, but it also tells you silver has gained strength on the gold market suddenly. And you see that right through here. Silver also got to the upper Bollinger Band, and I'll be surprised if it just shoots through it. It could, but I'd be surprised. I'm looking for support on pullbacks in this general range if it's offered. And you have to keep your eye on the fact that the market entered overbought territory on the first challenge of the upper Bollinger Band. I'll say it again, what I teach in my charting courses, that's where I think the pros take some money off the table. In the copper, even with the word on China that we're no closer and all, I'm surprised this market held up as well as it did. Admittedly, when the president said that, copper got hit. Now, if it gets back under this 267.25 area, what we had is a relief rally, still caught in very much sideways action as defined by the upper and lower Bollinger Band. They just make it easy to see at this point, where you went from the high to the low. Now you're getting these bounces and whipsaws back and forth. I would be surprised if we don't get that type of whipsaw. In the platinum, you got up to a number. It started yesterday with the upper Bollinger Band and the 100-day average knocking on the door of it. You hit it yesterday. Today you went to check it again, and you finished back, if you will, under both numbers. You're overbought. Market to me looks like a market that at any point can give you a pullback for no reason, but support, I'm going to look for it wherever that 18-day average comes in the morning. Right now it's around 827, but you are overbought. You're in a downtrend, a short-term downtrend in the palladium market. You've got lower highs, you've had lower lows. So take a look at this. Here's your lower low, higher high yesterday. Take this number out and watch out, because now what you're doing is you're setting the stage if the market wants to get the flush out the longs that came in. And that was a heck of another run the market's had. You could be back at that lower Bollinger Band very, very quickly. Momentum down, bias down, trend down. This market would have to get back over 1565.40 to negate the short-term downtrend that it has now created. In the dollar index, the support yesterday at the 100-day average proved to be rather, I guess, good in the sense that from yesterday, the market's up 49 points today. That's a heck of a rally. I'll still look for resistance wherever the Bollinger Band is. And this whole area here is fraught with resistance in the market. But I got to ask myself, why is the dollar going up when we're still talking, and I saw the Fed today talking lowering of interest rates? Don't know. I think you scared people today with we're far away with China, maybe could be the reason. It could be that the Iranian situation. I almost laughed because I read a whole thing this morning by the Ayatollah Khomeini, and again, just we're the terrible Americans and what our government's doing. And then the president says that he and Mike Pompeo are talking about missiles with the Iranians. The Iranians in California? I don't know who we're talking to. In any case, the market had a nice rally at the end of the day. Today, I was looking, and I promise you, I was looking at pivot points because I saw markets coming out of trends. And when markets sometimes come out of a trend, this tool fits in. What do you want to do? Do you want to get out of a market somewhere? Are you thinking that that'll offer an opportunity? Well, where are the entry points and exit points? So what a pivot point does is it does just what it's saying. It gives you a center line, and we teach the formula for it in the first video. You don't really have to do it, but it's neat to know it because I'm sure your charting software will put it up there. Then you get support and resistance lines. So under the market, you would think support, over the market resistance, but the key of pivots is traders are typically selling into resistance, trying to get back to the pivot, buying under it to get back up there, or buying the second support, sometimes even coming out at the first. How I tie it together is with momentum. So for in and out traders, this is absolutely not for position trading. This is an in and out during the day tool. It's fairly interesting. One of the things I've been tying it together with are these micro stock indices, which now are a tenth of the size of the standard ones, but the volume's off the wall. I've never seen contracts so successful in no time at all. We're not talking, are they trading a few thousand a day in those micro contracts? We're talking, in many cases, tens of thousands a day. Very, very impressive. So if you'd like to learn more about all this, just go to our website, Pivot Points. You'll see it in our free offerings. You can call my staff. They'll get you set up as well. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.